When it comes to inflation, the Federal Reserve and the White House are like firefighters who don't know how to fight fires. Bad news for the economy and investors. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. The big domestic issue is clearly rising prices, but the principal inflation fighters are floundering. This fire has them flummoxed. If the Fed is not careful, it could throw the economy into recession. Here's why. There are two kinds of inflation. One comes from the central bank undermining the value of the dollar by creating too many of them. The Federal Reserve has been guilty of that even before it had the excuse of the pandemic. It continued its manic buying of bonds and paying for them with money created out of thin air long after the economy began coming back to life in late spring of 2020. For the past year, the Fed has been employing a ploy called reverse repos, whereby it prints money and then borrows it back from banks overnight on a mind-boggling scale, $1.6 trillion at last count. These stunts eventually backfire big time. Yet our central bank refuses to take any blame for what is happening to the cost of living or doing business. It thinks inflation is a result of a growing economy. So it plans to raise interest rates instead of focusing on a stable dollar. The Fed shouldn't even be in the interest manipulation game. Interest rates are the price a borrower pays to rent the money, so to speak. Rent controls, or any type of price controls, do more harm than good. Artificially making money more expensive means higher monthly mortgage payments. It makes financing business inventories more costly. Now, how does that fight higher prices? That's why the Fed could end up pushing the economy downward. Contrary to what many commentators say, you don't need an economic downturn to kill an inflation. The biggest part of the price crisis is the disruption of complex, intricate supply chains from the COVID lockdowns. Shortages and higher prices resulted. These shortages eventually cure themselves if politicians don't get in the way. Unfortunately, the Biden administration is disrupting that healing process. Its war against fossil fuels has caused U.S. oil production to decline 2 million barrels a day from what it would have been. President Biden has been reduced to begging Putin and the Saudis to make up the shortfall. The shortfall not only has ignited higher gasoline, heating oil, and electricity prices, but also raising the price of countless other items. After all, plastics are petroleum-based. So are such items as clothes and footwear. The White House is making matters worse with policies that will, among other things, seriously harm railroad freight carriers, impose damaging price controls on the internet, and politicize business investment decisions in chip making and in other parts of the economy. This economic malpractice is similar to what doctors did centuries ago: bleed their patients. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions, and I look forward to being with you soon again.